Hi, welcome to the Market Alert for Friday, the 6th of August 2020. So the main headline really for yesterday's markets was crypto and small cap surges, hard data's hammered to 2-year lows, which is interesting given that it's the non-farm payrolls today. Amid all this exuberance in equity markets, hard data, i.e. economic data, is falling to its weakest since July 2019. So it's not looking good for the economy based upon the government data. So today is going to be interesting. And this is also fascinating as well, which is indicative of a market top where we've got, again, retail stock buying in July blew away all records, 50% higher than previous all-time high. The US retail impulse into individual stocks and ETF rose to a record new high in July, surpassing the previous record of June. And again, that's always a sign of utter madness. It's the same in the housing market when anything that comes onto the market is sold within minutes. But this is the big one for today, the July payrolls preview, 1 million or bust. We'll have a look at in a minute at the forecast, but this is what they're after. They're looking for 1 million to jobs created in the last month. We'll wait and see. The whisper number is over 1 million. And anything in that range will spark immediate debate of a Fed taper announcement in just 3 weeks. Well, that will be interesting as well. So let's have a look and see what we have actually got. This is the one the market's waiting for. The previous was 850, looking at 870, and the actual, they're saying, the whisper is that it will be 1 million. If it's 1 million, the Dow, the Dax, everything goes to the all-time high. The metals will be absolutely hammered, and the dollar will rise because they're not only tapering, there'll also be the case for increasing interest rates as well, but tapering first. So that's today's news. We have got 12:15 MPC member Broadbent is speaking, but that will be the market won't take any notice of that. The market is waiting for this. So expect a quiet morning as well, or there's a likelihood of a quiet morning. You never know. There may be some activity before, or there may, as times pass, it gets leaked early into the market as well. But the market will be waiting for this. The implied volatility also pointing yesterday, 1441 for Wednesday, Thursday down to 1325. So the market comfortable with the result that it is going to show. At least the, 895? 870, 870. And they're looking for 1 million there. So in the Dow, we can see prices continue to be sideways. And as I said, if the market forecast, the whisper, and the whisper is from Goldman Sachs, by the way, that 1 million jobs are created, then we go straight through all of this and break to the upside, as we know. But it's interesting that also the other headline where they talk about the data being very poor, and the poorest since July 2019. So is the data manipulated? Well, not necessarily. I think it's the way it's calculated, as the saying goes. You know, there's lies, damn lies, and then there's statistics, and it's the way that this lot is interpreted by the market. It could be bad news, and they'll still try and run it through and say, well, actually, it's not as bad as we thought it was going to be. You can't win. They just use it to their advantage. And how they want to use it based upon keeping the investors happy as far as the stock market's concerned. So that's where we are. If it's bad news, like I say, they may turn it around and use it as good news. The only difference is that you won't see a massive spike in the dollar. The metals will be allowed to trade higher. But if not, if we come above that 870, we come out above that, then I'm expecting quite a few fireworks in the market. So we'll see. 130 will determine this. Let's have a look at the 30-minute for yesterday. With the Dow, you can see that when we kicked off, the Dow just moved to the upside and then traded sideways, and then just before the close had another move to the upside. In the morning, you got a lovely retracement there back to 78, and then the market just consolidating until the pajama traders came on board, and New York opened the pre-market session around 8:30 New York time, which is around 1:30ish in the UK. Let's have a look at the DAX and the daily chart of the DAX. You can see yesterday we traded higher, and we're heading back now to the all-time high for the German DAX. We've got this one sell bar high out to get out of the way. This is at 15.778. The market needs to drive through this in order to move to the upside. We went through the 89% yesterday. You'll see that in part 2. And the 30-minute, you can see already we're above the DP, we're above the close, and we're just heading towards yesterday's high, which no doubt will be taken out as we move into the futures market at 7 a.m. And in the 2-minute chart, we just get a closer look at what's gone on overnight. Not a lot. You can see the spikes in volume where futures traders have come in, particularly this one, have come in and held the market and moved it above the close, the 200 MA, and like I say, the high is within a stone throw of 10 points, 12 points to get through this, which they're likely to do in the futures market when it opens at 7 a.m. Now, on to the metals, the dollar. We can see the dollar's already sparking to the upside, got a bit of life in it, heading back, putting in some form of retracement. Like I say, this is waiting for the news today. I'm not going to mention it again. I know I keep going on about it, but that's the case. These are the upper targets should the news be good. That's where the dollar is likely to be heading. In silver, they used the news yesterday to move the market down. It was just poetic. As soon as we got to, I'll show you in the 1-minute chart. As soon as we got to 230, the market started to, there you go, look at that. They started to move prices to the downside. You can see that. So at this point, I decided, well, if you're going to move it down, I'll try and buy back in at 24.95, which you'll see the order was there, but it didn't get filled. They decided they didn't want to go that far, and then they bought back in just before this and brought prices back. And then in gold, this daily chart of gold is what I'm after. We're trading back to the 78% retracement there at the moment, and the 89 will be very important. If the news is good, gold's going to get hammered, as silver will be hammered as well, which I already have an 89% marked up. The 78 I've deleted in error, but I can soon pop that back. But I will certainly be looking carefully around these areas, because they will really give this one some welly to the downside if the non-farm payroll figures are good, because it will allow them to do so and buy back cheaper, because it's all part and parcel of the plan of what they're doing. So let's have a look at yesterday for the DAX. The futures actually didn't move higher, which I thought they may have done. They moved to the downside, which you can see, but it didn't take long before the cash market opened and soon brought the weakness back. The market traded sideways. Like I say, this is the day before the non-farm payrolls. Price is just managing to move to the upside. The orange line that I have on the chart is the 89% from the daily as well. If I just wind this back for you and show you as the market opened, I had a look. There we go. Nope. And perhaps it's a bit, there it is. No, it's around here somewhere. I actually had a look at the daily chart. It's just there. There we go. Yeah, so I marked up the 89% there. And of course we've got the high, which we've already moved towards. So yeah, just moving through. We're stuck at the high for yesterday. Everything was green, and then we get a bit of a test at the 200 MA there, and then prices start to reverse back above the BRN as well, and they soon brought the market back on this one. You can see they're determined. There's just this sense of moving the markets to the upside at the moment. Again, just look at this, how the market is just stuck in a sideways range there at the 20 bar moving average, ready to move prices back to the upside. All of the averages are in the right order, 520, 200. Market trades up to 89. We see an increase in the volume there as the market struggles at this area. This is the 89%, which you'll see eventually as the market comes up to. This is from the daily, which I just showed you. Again, it's so important to use the daily chart to see exactly where you are. So had you have been long in this area, you know that when you get to this point that you're at 89% of the target in the daily chart. So the market held at that level as well. We see the prices retrace 78-89% back to the 89% in the daily chart, and then the market drifts down. We get an 89% at the bottom here, which I drew in beforehand, and then we're waiting for the weekly claims, which I have got here somewhere for you. Or have I gone past it? Let me just have a look. I've actually got a graphic here for you. It's in here. It's here. I can see it on the timeline now. So here we go. We've got the continuing claims plunge. Let me just do something here. I would normally do this beforehand. There we go. We can read it now. So yeah, the continuing claims plunge, but almost 13 million Americans remain on the dole. Sadly, none of this adds much confidence after the ADP disaster. Tomorrow's payrolls print on again about the non-farm payrolls. Yeah, the ADP was a disaster on Wednesday, but let's see what we get with the non-farm payroll. So yeah, that was yesterday's news. As we move on, you can see that the market moved a bit lower there, down to the close, retested the close, and then traded sideways and continued to move. Soon discounted the bad news. You see, this is what I'm saying. Even if it comes out at less than 870,000, they will find a way of turning it around and bringing the market back to the upside, unless it's way below that, like 600,000. So back to the Wednesday high, and then the market just traded sideways and drifted back up. This high, or the movement, we've gone through the 89 now, which you can see there. And what I've done is drawn on the 778 from this high, and that's what I mentioned at the outset, is the selling bar that came after the market made the new all-time high. And this is a classic case, you know, when you get a new all-time high, the next day there tends to be some weakness. So the market took that out, which you can see here at the start of the afternoon session, and then I moved the next target up, but the market struggled with the R1 and just drifted sideways, as you can see here. Again, it's the day before the non-farm payrolls, and that's about as much as it managed. A 10-point range, 12-point range for the afternoon, and that's just an expanded view. Again, you can see how the market came back down, put in a small retracement there of 78, and then went up. Also in here you can see how the market retraced and then went down. Here moved up, retraced, got a double bottom there, market moving back, but it was just stuck in a range yesterday. And when you can measure those sorts of retracements all the time, you know the market's in a range. Okay, that will do it for this one. Let's see what happens at 1:30, and I will report back on Monday. So have a great weekend, and as ever, thanks for watching. See you in the next.